Hello and welcome to the day ahead. It is Wednesday, September the 21st. I'm Andrew Gagan. Well, Wall Street session has ended sharply lower as the Federal Reserve meets to consider another large interest rate hike. All major indexes were off around 1%. The benchmark S&P 500 again closing below the key technical support level of 3,900. The real estate and materials sectors were hit hardest. Shares of carmaker Forward led the losses, slumping more than 12%, its biggest fall since 2011, as it forecast a larger than expected $1 billion hit from inflation-related supplier costs, while it's delayed the delivery of some vehicles to the fourth quarter due to the shortage of parts. That dragged other car makers lower, General Motors falling more than 5.5%. Elsewhere, Nike fell after a downgrade from Barclays analysts to equal weight as they cited volatility in the Chinese market from COVID lockdowns, and shares in Gap fell after announcing it was cutting around 500 jobs as it deals with excess inventory and weak sales. Well, as investors await the outcome of the Fed's interest rate policy meeting, there's more US economic data to consider. Home building increased more than expected in August as rising rents boosted the construction of multifamily housing to the highest level in more than 36 years, while building permits fell. And chain store sales for the week were up 10.5% compared with a year ago. The European Central Bank has indicated it may need to raise interest rates beyond its neutral level to restrict economic growth in order to cool demand. ECB President Christine Lagarde saying if there were evidence that high inflation risked de-anchoring inflation expectations, then the policy rate that is compatible with our target would lie in restrictive territory. The nominal neutral rate is seen as between 1.5% and 2%, well above the ECB's current 0.75% deposit rate. Meanwhile, Canada's annual inflation rate in August eased more than expected to 7%, even as food prices there rose at their fastest pace in 41 years. And ahead of the Fed policy decision, US Treasury yields continue to climb, the 10-year extending its decade high at more than 3.5%, and the 2-year is at 3.95%. The US dollar has maintained its strength against most major currencies, the euro falling below $1 and the Aussie at 67.2 US cents. Well, negative investor sentiment ahead of the Fed's expected 75 basis point hike has the local share market set for a sell-off this morning. ASX Futures down more than 1.1%. Global oil prices have fallen on concern of rising interest rates, that they'll slow demand. Brent crude down to $90 a barrel. Iron ore futures fell marginally while base metal prices were mixed, nickel rising around 1.5%. And the gold futures prices slumped further down to $1,671 an ounce. And risk-off investor sentiment has seen Bitcoin lead the crypto market lower. Locally today, Reserve Bank Deputy Governor Michelle Bullock will speak, while the RBA will release a review of the bond purchase program. We'll also get skilled job vacancies and labour force data, as well as the latest population statistics. And that is your day ahead. We'll see you again on Friday.